Hello YouTube. It has been a while. Sorry for not uploading. I've been taking care of some things, moving out, just a lot of stuff that's been going on. So I take a break from things, but I'm back at it now. Uh, Last time we were looking at the E-mini S&P 500. It was around probably beginning of November, end of October, around here where all these trades were made. It's now December 3rd, so it's been about a month since I made a video. But at that time, the market was still running in the $3,000 range, holding in with some resistance. But as you can tell, we pushed past through that, and now we've made a new high. We're at 3,100 and where did we go to? Almost 3,160. Since then, it's just been going up and up and up. We've had a correction right here, a retracement. Just average out some prices. Just a nice little pullback, which not really sure what's gonna happen up from here. Sorry, my dogs are playing in the background, but we're not sure what's gonna go on through here. Let's go into a daily recap. I'm using my 1,000 tick chart like I always do, but let's see, what kind of day are we at today? Yep. Oh, today looks like a range day. I mean, I guess you can say it's a downtrend if you count this morning, but I'm just going in from 9:30, which a lot of times after the sell-off, we're going to move sideways a little bit, which is understandable why we're in a range day. Uh, but yeah, which range days are nice if you know how to trade them, because you're just looking at support and resistance levels. Now, I haven't made a video in a month, so a few things I might forget about. But anyways, let's get in here. 9:30 comes in, we're open, we have this huge sell-off, we get a runner back up to the top at the moving average, which this is a trap right here. It's a dead cat bounce, or what a lot of people call it. What it is after a nice running sell-off like this, a lot of people get in, take a lot of buys, thinking it's the bottom, you know. So we run back up to the moving average, and that's what happened right here. A lot of people come in. Well, a lot of people also think that people are going to cover their shorts, get in, which is probably what happened as well, is people got out of their positions, covered them, uh, and when you cover something, you rebuy it. So therefore, we got a spike back up here. Failed to break through. Nice resistance at this point. This would have been a nice short right off the bat. Let's see. Go down. This would be a nice short right off the bat. You got this nice sell off at this point. You had a runner back up to this. This resistance level failed almost perfectly, and you have a sell off right here, which this wouldn't have been a bad one considering that's what happened a lot through this trend. But honestly, this probably would have been the better place to get in on a sell off. Let's mark this one. Well, yeah, let's mark this one anyways. But let's make this a maybe, because I'm sure a lot of people took it. Let's do blue. I'm sure a lot of people took this one anyways. But, if this is a failed second entry right here. So, this just gives you more confirmation on it. And we sell off, push out, and it's right under the moving average again. So, take this short, come down here. Definitely would only been looking for a few ticks. So, right here, it shows the support level. Comes back into play. Bounces back up to the 20 moving average. Runs down. You have another sell-off right here, which honestly, this is a nice candle, just showing you the market direction at this point. This one right here, you have a nice trend bar coming in, so definitely could get a few ticks on this scalp. You make all your money right here. What is this? 10 points, one day, right? Right off the bat in what, like a minute. So, right off the bat, you can make your money on this day and already be done. That's probably what I would have done. I would have got my 4 ticks or my 10 ticks, whatever it is I was running, and would have gotten out and taken my winners for the day. Because I don't like playing too much. I don't like getting greedy, because when I get greedy is when I lose. But if I have a winner, I'm going to keep my winner. If I have a loser, I'm going to cut my loser. You got to make sure when you lose, you don't lose more than your winnings. And you got to let your winners run if you can. Depending on your strategy, of course. Some people do. Some people stick to a straight, profit target, which is what I like to do. But if I can, let my winners run. I'll run 2 contracts, run out to the 10 ticks, and get it in. Sell my first contract at 4 ticks. Move my stop loss up to where I entered. So therefore, I lock in my 4 tick profit. And then if it falls back to my stop loss, I didn't lose anything. I still kept my 4 tick profit. I just lost my other tick with it. But if it hits 10 ticks, then I got my 4 tick profit, and then I got my second contract running to 10 ticks. Then I can lock that one. So we run down here. We got a bounce, at this point, unless we're going to keep selling, we've already dropped off, $60 on the day. So definitely one thing I've learned is a lot of times the breakout when the market opens usually fails and reverses, so you got to look out for that. And it's around this time after the market when the volume settled down, whenever it starts to make its reverse or its reversal. And we're extended way beyond this moving average too. So coming in here, I necessarily wouldn't get in right here off this bottom because, I don't like picking bottoms. I've lost a lot from picking bottoms, a lot of trades. So I like to wait for those confirmations, which you get right here at this point. This wouldn't be a bad one. This would be a nice little long scalp. You got this coming in up through here, this nice candle. We opened up here, ran all the way down here, but we managed to close back up through here. This candle just runs way up, and then you have another morning, guess you can call it a star, but wouldn't take it in right there. I'd get in on this one and have my stop loss in around here because that's where the support is showing, is at this point, because we broke through this resistance. So now we have a new support. Run up through here, a little pullback off the moving average. Not sure if I would take this one considering the whole downtrend of the day. So kind of iffy about this one. I don't know if it's going to have a little pullback just based on the trend or what's going on. So I would have waited. This came up. You had a huge sell-off at this point. Trapped some people out. Got people right back in, pushing back up. Now this wouldn't be a bad one, I think. I mean, you could get a few ticks on this, but I definitely would wait. On range days like these, a lot of times what happens is the market just starts making channels and it runs through its own channels. Like you have a larger channel, which higher support and resistance level, but then in the middle, the market will run in through like a tier 2 channel. So therefore, you have different support and resistance levels through those channels. And that's what gets a lot of people when they trade range days, including myself sometimes, is trying to figure out which channel I'm trading in and where to get those trades at. But once you watch these charts enough for a while, you can pretty much tell where the support and resistance levels are. So like right in through here, we had a seller at this point. I like to wait for my second confirmations, like right here. So we have another confirmation at this point. This bullish candle I don't really like this one. I mean, you could have got in on the scalp, got a few ticks, but not really, because, it was the first test, failed, and then we tried breaking up again, and then a lot of swings move in on, the second or third attempt, and right here we got one, two, three. We got 3 attempts running up through here to break higher, or the second attempt to break higher. That failed through with this huge candle, breaking this support level that we had created at this area. So this definitely wouldn't have been a bad short to get in one. Come in here, lock your profits, plus you have the risk on this is not as much from the upside because you got strong resistance coming in up here, especially with the sell-off in the morning. So then you can keep your stop loss tight with it, control your risk on this trade, and then you have all this room to run down as well, coming back through here after this resistance level breaks through, which it did. So definitely get in on a few ticks at that point. And then we had a bounce running back up through here. This kind of starts changing the market direction at this point, because now you have higher lows running in right here. So after the sell-off, this kind of shows you that buyers are coming into play at this point. So might be looking for more bottoms to get on and not shorts to take when you're at certain levels. And also looking for another runner back up to this high or this resistance level up through here, which is what happened. So we got another runner back up here to this level. Wouldn't take this one, fails, instantly turns green right there. And it's about 10:15, so volatility is kind of controlled at that point. Oh, let's mark it right here. Mark this one green, or whatever this color is. And so we get another runner back up through here. Plus you're a little bit below the moving average, and you got a new high-low. So, and you got a failed breakdown at this point after the sell-off. So I mean, you got some room to run up right there. Plus it's a nice trade because your stop loss is down here. Your support's pretty close in on your trade, so you don't have to have a huge stop loss on this one. So you have a nice chance of it moving up on the upside rather than it running down. And if it does run down, you still have a fairly tight stop loss on your trade to control it. Because my problem before is I used to always set my stop loss at a certain point, but I've realized a lot of times that if I do that, then the trade that I make won't work because my stop loss is too tight and it's at a certain level, and every trade's different, so every trade's going to have certain places it's going to hit or support and resistance levels that it's going to run to. So I've learned to adjust my stop loss accordingly to the position I'm at on the trade, which also helps me control my risk with it and control where I'm at on the position. So if I take a trade down here at the bottom and I have my stop loss, the last support levels pretty close to my entry on my trade, and therefore I can keep my stop losses tight plus decrease my risk on my trade and increase the upside because there's more room to run up. So take this one, get your ticks in, get a nice runner. Could have made your money in back for the day. And then come back up through here. We're at some resistance level. We sell off down through here and come back to the moving average. It's a range day. We're just going to be running back and forth through the moving average like it is. Not really many trades I see myself taking in through here. Kind of some volatility starts picking up or it looks like the trades start becoming more choppy rather than moving smoothly like it is through here. Come back down through here. You have a sell-off at this point. I guess you could take this short if you want to play it risky, but after, these huge candles running up. But we are at a resistance level right there, so that could be a point that you could get in, especially after this huge bearish candle right there. But to stop, we're running down through here. We have another sell-off. Not really sure I'd take in right there. Oh no, I don't really like this trade because there's no. Let's see. I guess you do have a confirmation with it, but I mean it did sell off right here. It was a pretty large candle, actually, but nowhere near as large as that one. I mean, I guess I can mark that like blue or something. If you want to get aggressive with it, you can definitely take that one, no problem, if that's your trading style. So coming down here, get a short, running back in like it's a range, like how it is. Down below the moving average, a runner back up to the moving average. Down through here, probably at this point of the day, probably would have been done trading. Probably would have already made a few trades to run in here. So I'm gonna cut this video short because I only trade from 9:30 to 11:30. So it's just a morning recap video. And I feel like it's already like 20 something minutes. But anyways, that's it for the video today.